But some of the things we look for when we analyze deals are the submarket locations near the cities, the history of the property, the condition of the property, competition, other types of renters or rental complexes in that area. And our business plan going to create the best ROI for our investors? Hi, everybody. This is Brian Lucer from BHB Group LLC with another edition of Why Not Real Estate Golden Nuggets. In this series, we try to take one aspect of doing a syndication and just unpack it and pull it apart and give you a little bit more information about it so you can see what it is that we're trying to do and why we think this is so important. So in this episode, I want to address why I feel apartment buildings are the best real estate asset class to invest in. If you ask 10 different real estate investors what their strategy is, you'll probably get 12 different answers. And that's okay. But for us here at BHB Group LLC, we believe investing in real estate complexes is the best rate of return. This is over stocks, bonds, mutual funds, other types of investments, even some other real estate classes. We feel apartment buildings is the strongest class. One of the other factors involved with real estate in general are taxes. We all know that if you can offset your income with expenses, then in an apartment building, if you've earned $100,000 and you have $50,000 expenses, then you're only paying taxes on the $50,000. Now, that's a very simplified way of looking at it. If you were to do some of these other tax strategies involved, forced depreciation or capital gains or gains or expenses that you can offset within the year, you can really see some significant savings in taxes with apartment buildings as an asset class. Then another factor in all of this is home ownership. If you've been tracking or following the real estate market, you know that over the past 5, 6, 7 years, it's been very difficult for first-time home buyers to actually purchase a home. So with the high amount of down payment a family would be looking at to purchase a home, it just doesn't make sense right now. So we're seeing more and more families actually renting right now in this market, which is increasing the value of owning an apartment building because there's more people renting. And then one of the next factors that we look for in apartment buildings, we're currently across the United States right now. There's actually four markets that we're looking in. One we've been investing in for the past 25 years, so we know that market pretty well. But there's 3 other emerging markets. And some of the factors that we're looking for in those markets are population growth. Are we seeing an increase in the population of that market, and why? Why is it happening? We're trying to look at all these different filters and figure that out. The number of renters, okay, we've already mentioned the barrier level for buying a home. Well, if there's more population coming into that area and less people being able to buy a home, then that's increasing the number of renters in that given market. And that's another indicator that we're looking for. Apartment vacancy rates, we've been tracking this for a long time. And for the past 6, 7 years, we're finding it very difficult for renters to actually find an apartment. There is just such a limited number of apartments out there. I think some of the last national averages were, and this was in the last 3 to 6 months, that we're seeing a shortfall of 4 million to 5 million residences, places where people can live. So there's actually a huge demand for renters right now. But again, we don't want to just buy in any market. We want to look for all these factors and filter to find the best possible emerging market. So vacancy rates really plays high into that, and that trickles into demand. I've already mentioned a shortfall of some $4 to $5 million of residences that people can actually live in. Whether they're able to buy a home or not, this is forcing the demand for renters. So within all of that, we're looking for supply requirements, the economic impact that this is having on a community in that market, the renter demographic. Are there younger renters coming in? Are there older renters there? We're looking at the age groups and the demographics of the people moving into an area. The immigration growth in some of the Sun Belts, we see more immigrants coming into that area. And we see a lot of people moving out of the north down into the warmer areas. So there's all these factors that we're tracking right now to really back up how we feel that investing in apartment buildings is the best asset class. A little bit of our background strategy here for investment. We are looking in our target markets for employment drivers, okay? Are there companies coming in, not just population, but are there businesses coming in? And are those businesses, are they diversified? If it was all one type of employer, or even more than 20% of one type of industry in a market, then that's a red flag for us. We want to see employment diversification in any given market that we're going in. We want to see several types of industries supporting that job market. The supply constraints, that's the number of rental ratios to permits being pulled. We've recently seen an uptick in permits for multifamilies, and that's another key factor we're looking at in some of the markets. So we're weighing out these three other markets, and if there were a lot of permits pulled for multifamily properties and apartment buildings, then eventually our supply demand is going to hit equilibrium. So one of the filters we're looking at is a low number of permits being pulled for the development of multifamily apartment buildings. That's a key factor for us as well. The submarket formation. Are we near metroplex areas with high population, lots of jobs? And then we're looking at the commuting paths around that. Where are the suburbs that are desirable that may have apartment complexes? That's another key factor we're looking at. And then the GDP growth, is it growing or shrinking in that area? Is that market actually making more money, or is it losing more money? Some of that has to do with state taxes. We know we've seen a lot of people moving out of California, and that's just going to really mess things up because California is going to look at property owners to replace that income in higher taxes. So we're following all these trends. Some of the other filters that we're looking at, are they landlord-friendly states? Are the laws favoring landlords instead of tenants? Weather patterns, believe it or not, but flood zones can raise havoc with your insurance rates. If you're buying someplace that is known to have floods, then that's going to absolutely be a factor in your bottom line, in your underwriting of that property in that deal, because you're going to be looking at higher insurance rates. Some of the other things we look at are multifamily cap trends. What are the cap rate ratios in those markets? And that's going to help us look at this deal over time. Is it going to be something that we can execute our business plan in? The cap rates, are they going to support our ideas for value add improvement of that property? For every dollar we can add in value based on the cap rate, if it's a 10 cap rate, if we raise $10,000 a month, that's $120,000 a year at a 10 cap rate. That's a $1.2 million increase in the value of the property, all for a very minute rental increase. So we're looking at those types of opportunities. The multifamily rental trends are, all these different factors. Are they creating more or less demand? Are the rental trends growing? Are more people buying homes? Where's that equilibrium? We want to be on the side of more renters in that market and growing more renters in that market. Absolutely. Some of the highlights on how we outsource our deals, I'll drill down on this in another golden nugget, but some of the things we look for when we analyze deals are the submarket locations near the cities, the history of the property, the condition of the property, competition, other types of renters or rental complexes in that area. And our business plan. Is our business plan going to create the best ROI for our investors? But I'm going to unpack all of that in another golden nugget. But for this one, I just wanted to recap again why I absolutely feel investing in real estate apartments as a class is the best asset class to invest in for real estate. Absolutely. We believe investing in apartments is the #1 asset class for investing in real estate. And again, this is Brian Lucier with another Why Not Real Estate Golden Nugget from BHB Group LLC. Thanks for tuning in.